I've seen men go from riches to rags in a single breath of the market. Not because the market changed, but because they never understood what it demands. They saw prices move and thought that was the signal. They saw others win and assumed that was the strategy. But the truth is this: the market doesn't reward action. It rewards preparation. Every man wants to trade. Few are willing to wait, and that's why most lose before they even buy. I've stood in the bucket shops of Boston, the great halls of Wall Street, and I've watched the same tragedy repeat itself decade after decade. The names change, the instruments change, but the emotions never do. Fear, greed, hope, desperation, each whispering the same poison: buy now or you'll miss it. I fell for that whisper too, until I learned the most valuable truth a trader can ever know: that the best trades are taken not in excitement but in clarity. Now listen closely, because what I'm about to tell you could save you from a lifetime of chasing shadows. Before I made a single buy, before I risked a single dollar, I had a test. 5 steps, 5 questions, 5 filters that separated my emotions from my judgment. They weren't rules from a book. They were forged in loss, paid for in pain, and every time I ignored them, the market punished me without mercy. But before I reveal that test, you must understand why it existed. Without the right foundation, even the best system collapses. Most traders think the market is a battle between bulls and bears. That's only the surface. The real war happens inside you. When I was young, just a boy, I memorized price movements. I could tell you yesterday's close, the last peak, the last failure. I didn't have computers. I didn't need them. I had memory and obsession. But obsession cuts both ways. Fall in love with the market, and you stop listening to reason. You start believing your talent can outsmart chaos. That's when the market takes you by the hand and leads you straight to ruin. Eventually, I learned that success wasn't about prediction. It was about discipline. I didn't need to know where the market would go tomorrow. I needed to know if I was prepared to act when the signal appeared. That's what the 5-step test is, a method to filter noise from opportunity. Before we reach those steps, let me tell you about the day I almost lost everything. It was 1907, the panic. The market was chaos. Stocks that had been soaring collapsed through the floor. Men panicked in the streets. Brokers shouted themselves hoarse. I was short heavily, and as prices fell, my fortune grew beyond anything I'd imagined. But in that euphoria, I made the same mistake countless traders still make. I believed the move would never end. I covered too late. Then I went long too early. The very system that made me rich became the weapon that destroyed me. When it was over, I had lost millions. But that loss gave me something far more valuable: clarity. It forced me to build the 5-step test. Because no matter how experienced you are, the market can still seduce you. It can make you see what isn't there. It can make you act when you should be still. If you take nothing else from my life, remember this: the best traders aren't those who act fast. They're the ones who wait with intention. Every great trade I ever made came from waiting for confirmation. Every failure came from acting in anticipation. Modern traders open your charts, see a breakout, and jump in, thinking you'll catch the wave. But waves don't care if you're ready. If your timing, psychology, or preparation is off, even a perfect chart will destroy you. That's why I built the 5-step test, to protect me from myself. And before I share it, you must understand the mindset behind it. Most traders think trading is about analysis, charts, indicators, setups. What they miss is that analysis without discipline is gambling. I didn't trade because the market looked ready. I traded because I was ready. When the market gave a signal, my decisions were already made. Emotion had no room to interfere. Patience is a position. Waiting isn't doing nothing. It's aligning yourself with the rhythm of the market. You let the crowd reveal itself before you reveal yourself. If I could give modern traders one gift, it would be the ability to wait without losing conviction. The market doesn't pay you for trading. It pays you for waiting well. Back in my day, I didn't have moving averages or oscillators. I had the tape. Every tick told a story. The tape wasn't about numbers, it was about behavior. Hesitation near resistance meant exhaustion. Drawing volume meant big operators were done buying. Movement without conviction meant wait. Today you stare at indicators instead of watching the story unfold. Price tells the story of fear, greed, and uncertainty. The secret isn't to interpret, it's to let price confirm what you already suspect. That's what the 5-step test does. It turns suspicion into structured patience. You don't need to know what will happen. You only need to know what you'll do when it happens. Trading isn't guessing, it's self-control. The market rewards those who do nothing until the moment is right. And when it comes, you must act instantly, because you prepared for it. Now, here is the test. This is the process that stood between me and ruin. Every time I followed it, I made money. Every time I ignored it, I paid with pain. This test doesn't predict the market, it confirms your readiness. Each step removes guesswork and emotion until only truth remains. Step 1, the line of least resistance. Before buying anything, I asked, is the market moving with me or against me? Most traders buy because a price looks cheap. Cheap is an illusion. A stock is never too high to buy, nor too low to sell. If it moves along the line of least resistance, that's strength. If it rallies but fails to make new highs, that's weakness. The line of least resistance is the direction the market wants to go. I didn't argue with it, I aligned with it. The market is a river. Fight the current and you drown. Flow with it and you travel far. If the general trend was up, I only looked long. If down, I only looked short. Most traders want to be right instead of aligned. So I asked, is the general market trending in my direction? If not, I waited. Trading against momentum exhausts you long before it exhausts the market. Step 2, confirmation by action. Knowing the tide isn't enough. Prices must prove themselves. I never bought because prices rose. I bought because they proved they could continue rising. A breakout that reverses immediately isn't strength. A breakout that holds and advances is. The market is a stage. One act proves nothing. You need the sequence. Confirmation by action means the market itself validates the move. If price shows strength with follow-through, if volume expands, if reactions are shallow, that's confirmation. When real strength appears, you can feel it. The crowd chases, yet price refuses to fall far. That's the market saying, I'm ready. Step 3, synchronize with the general market. Ignore this and you will lose. Even the strongest stock falls when the market collapses. I always asked, is this stock moving with the market? Leaders surge when others hesitate. Leaders recover when others stumble. If the market was rising and my stock was strong, it passed. If the market was uncertain and my stock still surged, even better. But if the market was weak and the stock couldn't rise, I waited. No stock can fight the overall trend for long. Probability rules trading. Probability favors alignment. Step 4, the test of reaction. Most traders rush after seeing strength. I waited for the reaction. After every rise, the market breathes. That reaction reveals whether the move is real or emotional. A shallow pullback on low volume is strength. A sharp fall on heavy volume is weakness. The reaction exposes who's bluffing. Modern traders call it a retest. I called it the test of reaction. If the move survived its first fall, it was real. If not, it was a trap. Before the 1929 crash, stocks that had been strong suddenly failed this test. They rallied, paused, and collapsed. That was my cue. I stopped buying and started shorting. That decision saved my fortune. Great crashes begin with failed reactions. Great advances begin with successful ones. Don't buy the first rise. Buy the rise that survives its first fall. Step 5, the final proof. Volume, behavior, and conviction. Even after passing all 4 tests, I had one final question. Do volume and behavior confirm strong hand control? Volume is intention's footprint. Rising volume with rising price means conviction. Falling volume during pullbacks means strength. But vanishing volume and drifting prices mean a dying trend. Professionals accumulate quietly. They don't create chaos. If price advances smoothly, pulls back orderly, and shows strength without drama, strong hands are in control. When volume increases on up days but never dies completely on down days, that's conviction. When all 5 steps, align, direction, confirmation, synchronization, reaction, and volume, you have the perfect entry. Not magical, logical. By then, the market has already told you what it wants to do. Your job is simply to listen. I never chased price. I let it come to me, and when it did, I acted instantly, because the decision was made long before the price moved. That's the secret of the 5-step test. It's not about predicting, it's about waiting for alignment. You modern traders have every tool in the world, yet the oldest one, patience, is the one you ignore. More tools than I ever dreamed of, algorithms, data, charts, indicators. But none of that replaces discipline, observation, patience. Without those, even the best technology becomes a gambling device. So before your next trade, ask yourself, have you passed all 5 tests? If you can't answer yes to every one, you're not ready to buy, because the market doesn't forgive haste. It punishes it, but it rewards patience richly. That's how I made my fortune, not by trading every move, but by waiting for the perfect one. When I followed my test, I didn't need luck. When I ignored it, I paid dearly. That's how I learned that the perfect entry point isn't about timing. It's about testing. You test the market, you test the reaction. And most of all, you test yourself. Because in the end, the hardest market you'll ever trade is the one inside your own mind. And when you master that, you no longer trade against the market. You trade with it. You can have the finest system in the world, but without discipline, it will betray you. My 5-step test protected me, but it wasn't the test that made me rich. It was my obedience to it. The market punishes those who break their own rules, not because it's cruel, but because it's honest. Once I found a trade that passed all 5 tests. I didn't think, I executed. Decision-making was done long before. Read the price confirmed. That's the secret few understand. The best traders make their decisions when the market is quiet, not when it's loud. By the time the signal appears, the outcome has already been decided by your preparation. I remember a trade in Union Pacific, weeks of quiet strength, volume rising, price steady. It passed every test I had. I bought when the market confirmed. For days nothing happened. Then suddenly it exploded upward, clean and relentless. That profit wasn't luck. It was patience cashing its reward. Because I didn't chase. I waited for the market to prove itself. Most traders today can't do that. They mistake activity for progress. They think movement means opportunity, but in truth, profit belongs to those who can wait. You can't force the market to reveal itself faster than it wants to. Your job is to prepare until it does. Now, let's talk about the real enemy, emotion. Fear and greed are the same demons that haunted the ticker rooms of my time. You feel them today through screens. I felt them through the tape. Fear whispers, don't lose what you have. Greed whispers, double it before it's gone. Both are liars. The moment you act on emotion, the market owns you. That's why my test wasn't just a method, it was armor. It forced me to slow down, to earn each trade instead of chasing it. So when the market tempted me with early breakouts, I waited for the reaction. When the crowd panicked, I stayed silent. When everyone wanted action, I wanted proof. The 5-step test wasn't about finding certainty. It was about building patience until certainty revealed itself. Understand this. The perfect entry point isn't about prediction. It's about readiness. The perfect moment isn't when the price turns. It's when you stop doubting. When your plan, your patience, and your preparation align, that's the true signal. Not when the candle flashes green. And not when Twitter says buy, but when your tests are complete. Only then do you act. Discipline doesn't mean inaction. It means delayed action. Action reserved for the right conditions. When all 5 tests align, the trend is in your favor. Price confirms through action. The general market supports your direction. The reaction proves strength and volume confirms conviction. You don't hesitate. You strike, not with hope, but with clarity. Because hesitation after confirmation is as fatal as acting before it. You see, patience and decisiveness aren't opposites. They're partners. Patience prepares you. Decisiveness pays you. The market rewards those who wait and then act without hesitation when the time comes. That's the balance I spent my entire career mastering. I learned it the hard way through loss. In 1907, I made millions by following my rules. In 1915, I lost them by breaking them. The difference wasn't the market. It was me. You can't control what the market does. You can only control what you do when it moves. Every trader wants control. But real control doesn't mean forcing trades. It means mastering yourself while the market tests your patience. And believe me, it will test you. It will tempt you with false signals. It will reward your bad habits once, just to teach you pain later. If you want to survive, you must build habits stronger than temptation. The 5-step test was my safeguard. It protected me from myself. It reminded me that waiting is not weakness, it's strategy. After every victory, I humbled myself back to step one. Because success can intoxicate faster than failure can humble. When you win big, the market whispers, "You're invincible." Go bigger. That voice destroyed more traders than any bear market. After my biggest wins, I traded smallest because that's when the danger was greatest. Not in losing, but in believing I couldn't. Humility. It's your final defense. If you treat every trade as if it can be your undoing, you'll stay alive long enough to thrive. Let me tell you one last truth. You don't trade the market. You trade your behavior. Charts are reflections of emotion, yours and everyone else's. The crowd acts out of fear. You must act out of logic. The crowd seeks excitement. You must seek confirmation when your behavior becomes disciplined, your results become predictable. The market will always move in cycles. Technology will change. Assets will change. But the psychology never does. The same emotions that drove ticker traders in 1907 drive digital traders in 2025. That's why my lessons endure, because I didn't trade stocks. I traded human nature, and human nature never upgrades. So the next time you open your chart, don't ask, "Where should I buy?" Ask, "Have I passed the test?" If not, close your platform. If yes, step forward with conviction. That's the difference between gambling and trading, between guessing and knowing, between chasing and waiting. The perfect entry point doesn't belong to the fastest trader. It belongs to the patient one. You want my secret? Here it is. The market always gives one last chance to those patient enough to wait for it. Let the amateurs rush. Let the crowd react. You prepare, observe, confirm. Because when you master waiting, you'll realize something profound. Waiting is a position. If you found meaning in these words, share them with a trader who still chases the noise, like the video if patience has ever saved you, and subscribe because next time I'll show you the opposite side of the coin, how to exit before the crowd even knows the move is over. Until then, trade well, trade wise, and never forget the market rewards patience, not prediction.